I told you there's a monthly paying stock that delivers both consistent and safe dividends? In today's video, we're breaking down Main Street Capital, ticker MAIN, a top-tier BDC that pays you every single month and occasionally drops special dividends. We'll cover its current yield, stock price history, what the company actually does, how it stands apart from other BDCs, the equity they hold in their portfolio companies, and finally, a 5 to 10 year projection of what a $10,000 investment could realistically look like. So if you're chasing passive income or just want to know if this high quality payer deserves a spot in your portfolio, stick around because this one matters. Let's start with the money. Main Street pays a regular monthly dividend. For Q3 2025, that's 25.5 cents per share for each of July, August, and September, which totals to 76.5 cents for the quarter. On top of that, they declared a 30-cent supplemental dividend payable in June 2025. Without the special dividend, the current yield sits at 5.2%. Including the specials, the total yield climbs to roughly 7.4% annually. What's even better is the steady growth. The regular monthly dividend is up about 4.1% year over year versus Q3 2024. That kind of consistency is rare in the BDC space. Now let's zoom out. According to Q2 2025 results, NAV per share sits at $32.30, but the stock currently trades around $58.70. That's a huge premium to NAV, much higher than most BDCs. But why the premium? Simple. Investors are paying for reliability. Since inception, Main has delivered an annualized total return of 17.35%. Even over the last 10 years, it's still hovering around 15.26%. Between steady income, special dividends, and capital appreciation, Main has earned its reputation as one of the most respected names in the BDC world. So what does Main Street Capital actually do? It's a business development company that provides long-term debt and equity capital to lower middle market businesses, typically those with annual revenues between $10 million and $150 million. The key difference, Main invests in both debt and equity. Most BDCs stick to floating rate loans that just throw off interest income. Main takes equity stakes in many of its portfolio companies, meaning when those companies grow or get acquired, Main shares in the upside. That's one reason its share price has climbed so much over time. The company also reported strong fundamentals, a 17.1% annualized return on equity for Q2 2025 and a low 2.1% non-accrual rate. Translation, management knows what it's doing. Now for the fun part. What could a $10,000 investment in Main Street look like over time? Let's assume a starting yield of about 6%, dividend growth of 3%, and share price growth of 2% every year. After 10 years, reinvesting dividends, your $10,000 could grow to roughly $22,000 in total value, depending on compounding and reinvestment timing. Roughly an 8.5% annualized total return. That's not speculative ETF territory, but for a monthly payer with a long dividend history, it's a respectable and sustainable return. So the question to ask yourself is Main Street Capital worth the premium? Personally, I think Main deserves its reputation as one of the most dependable income machines out there, but valuation always matters. At nearly twice its NAV, you're paying for quality, so consider waiting for dips or dollar cost averaging in. What do you think? Does Main's track record justify its price? Drop a comment below, and if you want to see more of the best paying BDCs out there, go check out my top 5 BDCs paying you monthly or quarterly dividends video next. Until next time, keep investing, keep stacking dividends, and I'll see you in the next one.